Good morning, it's time for a Tuesday tutorial. Now, DeFi yield farming can offer intensely frothy yields on exotic native tokens. Behold this 46,245% on a pangolin farm. But, oh look, a TVL of 54,000. Do you feel safe there? Well, no. Now, it doesn't matter if you're bagging thousands of extra tokens every day if the value of that token is plummeting while you do. Stablecoin yield is really the spine of meaningful DeFi. It's a savings account that doesn't laugh in your face with pitiful interest rates. So today we'll look at two different ways to earn interest on stablecoins. One of them moderately safe and the other one fully degenerate. Now, it's good to look at what's around here, but before we get into all of that, a quick word from our sponsors. Nexo.io is a trusted and easy to use crypto lending and exchange platform where you can buy cryptocurrencies at the touch of a button and start earning up to 17% annual interest that's paid out daily. They support all of the major assets on the market, including Bitcoin, Ethereum, Solana, Polygon, and Polkadot, and allow you to swap one asset for another with lightning speed. With Nexo, you can buy crypto with your Visa and MasterCard credit or debit card instantly and start earning on your digital assets right away. You can also borrow cash and stablecoins tax efficiently against your digital assets without selling them. Nexo complies with the highest security standards and is audited in real time, which is why nearly 3 million people in over 200 countries trust the platform with their digital assets. So whether you're just getting started or you're a seasoned pro, get the most out of your crypto today at nexo.io. Unstoppable Domains is the #1 provider of NFT domains. With your unique NFT domains such as camilla.crypto or camilla.nft, you can replace your long, complex wallet addresses, verify ownership of your NFTs, log into Web3 apps, and join tens of thousands of people using them as their Twitter usernames. Better yet, with Unstoppable Domains, you don't have to worry about gas or renewal fees, and you own them forever. Go to unstoppabledomains.com and get your name, .crypto, .x, .nft, or a range of other endings for as low as $5. So before we kick off, I just want to mention the $100 million settlement BlockFi has agreed with the SEC. And their interest products used to be able to earn customers around 9.25% APY on their crypto, but under a new SEC ruling, these accounts are considered securities. Now, there's some pretty serious implications for this in terms of compliance, and it could well mean that in the future, only accredited investors will be able to access a fully regulated DeFi-powered savings product in the US, like BlockFi's new BlockFi Yield product. So here it is, and this will basically be an S1 registration, and that means that, yeah, it's going to be a security token, a security savings product. Now, BlockFi themselves haven't admitted to any wrongdoing, but they've clearly felt the need to settle this because they were shaken down by the SEC, and now they've probably got enough money in the bank to set up this security product. I mean, yeah, there's some serious implications here for the whole DeFi savings product line. I don't know what it's going to mean, but we're keeping an eye firmly on it. But before we get into all of that, let's get into the yield farming. So the #1 that we have to look at is going to be Anchor, the so-called benchmark rate for DeFi saving. It's currently offering, if you go into the web app, 19.46% on stablecoin deposits. So that's UST. And bear in mind that this is fixed. So this doesn't fluctuate around and vary around. This is fixed. And what we can do is go and look at DeFi rate, the trusted resource for all things crypto, and we can see the lending rates on DAI and USDC across platforms like Celsius, Gemini, Nexo, BlockFi, there's BlockFi again. And as you can see, you're getting 8.75%, 8.5%, so that 19.46% on Anchor is a good deal better. So to deposit on Anchor, you're going to need UST, which you can get on Uniswap. So we go here, check for UST, there we go. And that's the wrapped UST token. You can also get it on PancakeSwap. So if I look for PancakeSwap now, just type in the token you want. So again, UST, and there's PancakeSwap. And you can also get it on ViperSwap as well, which is the decentralized exchange on Harmony. So UST is also available there. And the advantage of that, of course, is that those chains, both Harmony and Binance Smart Chain, are a lot cheaper to transact on than Ethereum. So you might have your funds there. This is how you'll be getting it. So you're going to be getting a wrapped version of the UST token, not the native token, because UST itself is native to Terra, so the wrap version allows you to transact with it on Harmony or on Binance Smart Chain, and that's how you can do it. You can also get it on a centralized exchange like Binance or Bitfinex. The advantage of doing that is that you will be able to choose which network you'd like to transfer the tokens out through, avoiding the need to use a bridge. But if you are committed to decentralization, you're going to need a Terra wallet to use the Terra bridge, which you can set up here using TerraStation. So TerraStation is the kind of approved wallet for the Terra network, a bit like MetaMask on Ethereum, although MetaMask is not approved so much as it's just the one that everybody uses. TerraStation is the wallet that most people use on Terra, and here you can easily set up a new wallet to allow you to do what you want to do. But you definitely will need a wallet on Terra in order to do any kind of actions on Anchor. So here is the Terra bridge, and the bridge gives you options for which network you want to use to send and receive from. So you can see Terra, BSC, Harmony, and Ethereum here to Terra, and then the amount of UST that you want to send. So you can put the amount in here. You need to make sure you have your destination address. So go to the TerraStation wallet, click copy, and then go back to the bridge, set that as your destination address, and then on next, you're going to sign this transaction using MetaMask. I actually bridged some over earlier, didn't take that long. So look, here we go. This is going to cost me $4.90 to do this bridge transaction, and I'm going to reject that for now. But that will usually take about 15 minutes, but I think the cost from the other networks will be significantly cheaper. Although $4.90, not so bad. So if we want to deposit on Anchor, here's how you do it. You go to the Earn tab, go to Deposit the amount you want, so let's say 150, proceed, and then it will ask you to put your password in for the wallet that you have. I'm not going to do that now because I don't actually want to do anything with this. I've already deposited the way I want to, and then that's it. So easy enough to deposit, and it shouldn't cost too much, and it's very, very quick as well. So that's how you do it if you're bridging over. But what happens if you don't want to bridge over? Well, if you don't feel comfortable bridging tokens from ETH, then you can use Orion to deposit UST or USDC and still take advantage of the Anchor savings rate. So let's go ahead and look at Anchor now. So if we look at the savings rates that are available to us here, you can see that they're only 15% on stables. It's still good, but it's not as good as it could be. But the advantage here is that you can deposit wrapped UST, Binance USD, Tether, UST Coin, DAI, Frax. We're going to ignore Orion because it's not a stable coin. But here you can get on all these different non-Terra tokens the same interest rate that you would get with Anchor, except you're paying a premium for the privilege of being able to do so. So you're only getting 15%. But if you remember when we looked at these rates here on DeFi rate, still better, almost double there. So that's one way to do it with Orion if you don't want to bridge. Now there's one other option we can look at here. So this is Kash.io, and this is I guess it's kind of, they're aiming to be a neobank built on the Terra ecosystem, but it is a long, long way from that at the moment. If you don't want a neobank, think Revolut. That's a neobank. So mobile only, but here we have an app which is built on Terra, and they have a savings account and a checking account. They say with 10% earnings in US dollars. Actually, when I looked at it with Kash, the savings account on Anchor is earning the same rate as Anchor would be normally. What I like about Kash is that you can deposit wrapped UST using an Ethereum wallet and deposit straight in. And then you can do the bridging, you can switch between different flavors of UST within the app itself. You can only connect from the Ethereum network, I believe, and the Terra network. And it is a little bit complicated figuring out which account you're using. So whether you're using a checking account, whether you're using a savings account, whether you have your own private Terra wallet or your own private Ethereum wallet. So figuring out which one of those you're in takes a bit of time, but it's very, very easy to deposit, very, very easy to send and transfer between accounts. And what I also like about this is they have support. So if something goes wrong, you can message them and they will get back to you very, very quickly to sort out any problems you might have, because it doesn't quite work the way you'd expect. What's also interesting here is they're going to have a card So they're aiming to have debit cards. Now, I've been keeping a close eye on this one because supposedly this was meant to roll out in January. I applied for one, haven't got it yet. But I'm looking at this like, what does a good savings account look like in crypto? If people have a checking account and a savings account denominated in UST that they can pay for groceries with, but also when they're putting money into that account, it's earning a really solid savings rate. That's all we want, really. So one other thing I like about Kash is there's two-factor authentication. If you want to log in, it sends you an email. You have to then click the email link to jump in, but you can also do that two-factor authentication as well to give you a bit more peace of mind, because if you're just interacting with DeFi protocols, I don't know. I mean, it depends on your risk profile. So another way of really maxing out Anchor is to use Degenbox by Abracadabra Money. We've actually covered this in a previous tutorial. I'll link to it up there or in the description. But this is using yield folding to get leveraged exposure to Anchor. Wild stuff. So that is what I would call the safe version. Of course, there are risks involved. Anchor is heavily weighted towards the earn side of that money market, which means that not enough people are borrowing to make up the yield that you're getting on the earn side. And that means that yield is actually coming from the reserve. That reserve is getting annihilated at the moment by the likes of Orion, the likes of Degenbox. And it's going to run out. Now, they've topped it up with a bunch of money, but there's a risk that it will run out. Now, that doesn't mean that you're going to lose your UST, but there might be some uncertainty. There's always a risk of depegging with an algorithmic stablecoin. So just something to bear in mind. UST is not perfect by any stretch. There are risks involved. It's getting better the longer it goes on, but would you put $1 million in here? I don't know. But most of you probably won't have $1 million, so it's not a problem you're going to be worried about. But just exercise a little bit of caution. But that's why I think when there's something like Kash, where you can add a bit more security to the way you interact with it, that's going to be a good thing. So that's the safe version. Let us now pucker up and go for the hardcore version. And we're going to go just straight into it. So what we're going to be doing here is using Defrost Finance on Avalanche. And I want to give a big hat tip to YYC and DeFi Dad, who delivered this for the Defiant DeFi Alpha series. And this is like full-on hardcore Degen yield farming stuff here. So pucker up. Here's how it works. So what we're going to do is we're going to provide USDT or USDC or DAI liquidity on Defrost Finance, and then we'll get yield, which is issued in MELT tokens. And then there's also HTO, which is Defrost's over-collateralized stablecoin you need to think about. And here we can boost our yields by staking MELT tokens. So to participate, what we're going to do is add liquidity to the H2O 3CRV pool on Curve, and then stake those LP tokens on the Defrost app. So Defrost Finance is it's a DeFi stablecoin protocol on the Avalanche blockchain, and it's got this H2O dollar-pegged stablecoin, which is collateralized by liquidity provider or LP tokens and interest-bearing assets. MELT is the protocol's governance token. So what we're going to do is head to the farming page, and we're going to be looking for the Defrost H2O 3CRV-F pool. And as you can see here, there's a 59.99% basic APR, and you can boost that all the way up to 329.93%, which isn't too bad at all. And so we boost this by staking MELT tokens. So there's a few steps here. You need to make sure you're on the Avalanche network. So in order to make sure we connect to this properly, we need to use chainlist and then type in the Avalanche network, and then make sure we connect to that specifically. If you haven't got this Connect Wallet button here, it might say Add to MetaMask, and then you can just simply add it to MetaMask. The next step is to bridge your assets, and we're going to use the official Avalanche bridge since it provides an initial AvaX airdrop for gas fees, but there are many other options. You can use AnySwap, Keller, or Synapse. Gas fees on Avalanche are actually paid in AvaX, and you'll receive 0.1 AvaX when you bridge assets for the first time. It's definitely worth buying some extra so you don't run out of gas at the wrong moment. And you can do this on Trader Joe, which is the main DEX on Avalanche. Step 3 is going to be to add liquidity to the H2O 3CRV Curve pool. So you can deposit USDC, USDT, or DAI, and you'll be asked to approve the spending of your assets, then confirm the transactions to receive your liquidity provider or LP tokens. Step 4, stake your LP tokens on the Defrost farming page. And that is it. You're now earning MELT tokens, which you can claim at your convenience. You can sell that MELT or alternatively stake those tokens to then boost your farming yield. And the max that you can get here is around, well, it's getting up to around 6x at the moment, but of course it does move around as funds exit and join the pool. So that's it for today. 2 very, very different ways to max out the yield on your stablecoins. If you have any suggestions or something you'd like us to take a look at for a tutorial, please do drop it in the comments below. And of course, as usual, get subscribed, drop us a like. If you don't like it, but that's also fine. We won't hate you for it. But in the meantime, have a wonderful day. Peace!